We're looking at S&P 500 mini futures. Time frame is 2000 tick chart, and the structure of the market is a clear bearish trend. We have series of lower highs, lower lows, and you can see the blue line, the 21 bar exponential moving average, keeps rejecting prices every single time, and in fact, prices never pushed above the EMA. So from price action perspective, I can see that this is a very strong downtrend, which means I need to identify a pattern because there's always a pattern, a channel for these candles. So as I identified my channel, the bias is bearish and I'm looking for high probability setups to sell. I cannot just sell randomly at any point because I don't know where exactly the price is going to pull back. What I want to do is I want to wait for high probability setup to form at the key entry point, which would be either the EMA or the trend line, and take a high probability setup around this area where all the smart sellers will start selling. I'm resuming the video as I entered a second entry short at the key entry point. New low formed, first entry short, pull back, second entry short. It's right off the trend line. First leg up, break, second leg up. This is the larger two-leg pullback. We're bouncing off my exit order, but we need to tick through. So this is the two-leg pullback, high probability setup, and we finally tick through. So I'm going to tighten the stop loss because anything right now we make is just a bonus. We managed to get our scalp, and you can see this is the lowest low, and I'm going to reset the count. I'm going to count here, first entry short, the lowest low, so I'm resetting the count. First attempt to sell, pull back, second attempt to sell. So this right here is the second entry short at the key entry point. The pullback played out, the correction played out because we have a break and a new extreme, and the uptrend played out for the bullish correction. So you can see this is the high probability setup, the variation of a two-leg pullback, first leg up, break, second leg up. Doesn't get more textbook than this because you can see we identified the trend line earlier. So you're just waiting for prices to pull back to the key entry point in the form of a two-legged pullback. So let's see if we can get a decent runner at this point. And signal bar was great, tier 1 signal bar. We closed above EMA, but in this instance it's okay because we are right at the very confirmed trend line. Notice the trend line was confirmed so many times, and it was the first bar that we closed above EMA since the very beginning of the session. So this can be classified also as EMA gap bar. If you have strong downtrend and you have first bar that closes above the EMA, you can treat it as EMA gap bar because prices will most likely retest the low again. The stock market is opened and we can see that the prices are correcting. Now we have traded down for quite a long time, basically the entirety of the session. So we may have stronger pullback that will unfortunately get us out of our runner. I didn't want to really trail it tight because the trend is still in play. We are right now having our first break of this downtrend. So according to rules, we expect for prices to eventually retest the new extreme. So you can see we identified the channel early. There was a textbook two-legged pullback, doesn't get any nicer than this. Now we have a first break, and given the strong downtrend, we expect for prices to eventually retest the new low. I cannot sell just yet. I want to see some push below EMA and probably some failed second entry long. So I know that it is okay for me to start looking for new extreme because I don't know how strong the correction is going to be. So I'm just observing. I'm not buying, and I'm expecting for prices to reach the new extreme. I'm scalping 6 contracts and I'm leaving 1 for runner. I'm scaling out because I want to not deprive myself of the opportunity to capitalize on potential strong down move. I still want to be a part of the bearish trend. The scalp portion was the main portion, and I don't want to leave money on the table because it can affect me not only monetarily but also mentally. And it looks like prices are heading for a runner. So we only made 2 points of the 1 contract. Prices form a two-legged pullback. We have a break and a new extreme of the uptrend. We are at the potential range highs because EMA is flattening a lot. And right now, in order for me to predict a push to new extreme, I want to sell a bullish trap. So I'm looking for failed second entry long. We're already pushing below EMA, which is a good first sign. Looks like prices are working lower without even a pullback. Hopefully we get a couple of pullbacks so I can get a chance to sell high. I really like selling at the highs where the bulls who are playing the wider channel are getting trapped because the downtrend was the main prevalent pattern, and that's the main bias in price action. I'm just drawing the corrections tight. Let's see if we can get some pullback. So price action rules played out. There was a larger two-legged pullback. Bullish correction played out with the break in new extreme. Notice there was a very strong push below EMA and a lower high confirmation setup with the failed breakout, which we never managed to get a failed second entry long. Fortunately, there was a doji bar, which I didn't really like entering because after you see such a 3 big bearish bars pushing lower, you start to feel like that the failed second entry long may not form because you're already in the middle of this tiny trading range. So you may think about entering this lower high if you have slightly better bar. The bias now is so bearish that I'm not really looking for reversal just yet. Even though we have a breaking new high, breaking new low, I'm definitely not looking for reversal. You can see a lot of small bars, minimal bullish pullbacks indicating very strong downtrend. Take into consideration this bullish correction, how tiny it is compared to the overall structure of this downtrend. So this means I am still thinking bearish. However, I just need to let the correction play out. We just reached a new extreme. We actually have a new low, first entry short, second entry short. But after new low, I want to see something more of a confirmation setup, not just second entry short. So far, perfect price action. You can see we were in a consolidation at the bottom of the move. So right now I'm just sitting patiently, waiting for price action to correct. I like to be selling at the highs where it is obvious that the sellers are going to step into the market. Now that we already created a new extreme, you can see a lot of bulls are jumping in the market. We reached a new extreme, but the bias was so strong that still you have the seller's momentum. And this is area that I don't want to be forcing setups. I want to take something clear and easy without conflicting beliefs. So I'm just sitting on my hands and letting this price action to correct. All right, traders, I'm expecting a failed second entry long and a second entry short, new low, first entry short, second entry short, a new high, first entry long, second entry long, because the uptrend had to break new high. Strong bearish push below EMA confirming the overall bearish momentum. Daily bias is still bearish. We only had sketchy lower high. I hope we will not push lower. We can get some little pullback. Let's see how it forms. Getting a little bit sideways, but I will decide how it forms because we have a break new extreme, strong push back below the trend range. You can see very strong bearish days. So just reading the pure price action and waiting for that high probability setup. So I've been sitting here still with just my one single setup. Price action is working in this consolidation for such a long time that I'm not really touching it. This was a great setup. I was a little worried that the body is quite far from EMA, so I wanted to see great finish, the bearish finish, but it was a two high probability setups in one. First entry long, second entry long failure, and new low, first entry short, second entry short. You can see back below the trend range, back off the EMA, and it's a great high probability setup. I had some technical issues with the recording, so I didn't manage to get to record properly the rest of the session. I ended up taking still this one setup, but let's talk about the price action because the very strong downtrend slowly transformed into a weak downtrend. And even now we had a break and a new extreme. And you can notice how suddenly the exponential moving average is getting flat and we are going sideways for a long time. This means there's a potential for market to start already reversing. You can see how sideways it's been going. A lot of buyers are stepping into the market and the bearish momentum is slowly dissipating. So the more sideways you get, the more you can expect some possible correction. Even the wider channel had a break new extreme. Buyers are buying at this particular level. Prices are pushing above exponential moving average, and notice we have the lowest low where we're going to reset the count. First entry short, pullback, second entry short failure. So this right here is a failed second entry short, which can be considered reversal pattern because all downtrends played out. We don't want to be drawing any wider downtrend. It would be just simply too wide. Even this wider downtrend is mainly supportive. So this right here is a reversal pattern indicating to us that the market is potentially reversing. New low, first entry short, pullback, second entry short. EMA keeps holding here and a great signal bar. So a more advanced trader can already start considering this failed second entry short. But notice it is getting a little bit congested, which is not uncommon. It takes a little bit of time for the second entry short sellers to get trapped while the downtrend is already depleting and the bullish momentum is starting. But it's a little bit congestive, so it is definitely more aggressive. And notice, as the market keeps trending to the upside, I need to adapt and I need to redraw the wider uptrend. So what I'm going to do, I'm going to redraw the wider uptrend and prices continue working higher. And you can see we broke higher, came back, attempted to test it, a little bit of breakout pullback, but we're not really interested in fading the breakout now because EMA keeps holding. The wider channel is in play and we expect reversal. Remember, all downtrends reach new extreme and it was too flat. The fact how flat the structure is getting is a good sign that the market is about to at least have some stronger bullish correction. And notice what we have. New high, first entry long, pullback, second entry long at the exponential moving average. The first break of this uptrend, which means that according to trendline rule, the prices will most likely form a new extreme. It take a couple ticks lower, EMA held and prices continue working higher. And in fact, we have small support forming. So this right here is a second entry long, decent high probability setup because the uptrend is new high, two-legged pullback, and the signal bar was so strong that you expect now the prices will reach new extreme, and market formed new extreme. And prices are going sideways. Okay, so as I'm watching this, I see prices continuing working to the upside again. So I'm going to redraw the wider uptrend like this, copy it, put it at the top. We had a micro double top, which means I have to reset the count, so we technically only have first entry long. Had this high been a little bit lower than this, we would have treated it as a first entry long, pullback, second entry long. But since there is a micro double top, which means I need to reset the count, this is technically just a first entry long, which is a shame because it is at two key entry points, the EMA and now the newly confirmed trend line. Because prices are working higher so strongly, you can see one seamless leg working higher. Unfortunately, just a first entry long. I'm going to redraw the correction. Even the wider channel is getting a break. Okay, here break new extreme. So we expect right now for prices to test the new high of this wider channel. The wider channel got definitely confirmed here. Notice how nice it is fitting. I'm just going to temporarily delete this. Seamless uptrend, break new low, first leg down, pull back, second leg down, and we have a second entry long. But the second entry long is still below exponential moving average. If I see second entry long below EMA, what am I expecting? I'm expecting push above EMA and a high-low confirmation setup at the EMA or failed second entry short, and notice prices never formed a confirmation setup, which is a shame. Had this second entry long formed above EMA, I would have taken this, but it is still below EMA. The context is really strong that you're going to create the new extreme for the uptrend. You can see two-leg pullback here, two-leg pullback here, and a variation of a two-leg pullback visually, two-leg pullback. So your job as a price action trader is to locate the key entry point, follow the trend, and wait for the correction to deplete and enter the two-leg pullback. A little bit more aggressive. The price action formed new extreme, and the market keeps correcting. Now, when I was watching this, I was not looking for reversal. You can't really reverse just yet because everything is a little bit stacked. Not the great reversal bar for failed second entry short, a horrible bar. I was looking for possible spike in a channel like this, but I ended up having overshoot, which means I definitely need to respect the bearish correction because we may break the trend line or reverse. So I was still looking for failed second entry short above the exponential moving average. But as you can see, prices never managed to push above EMA and allow us to identify a nice trap above the EMA. So after the fact, I had to redraw it to break new extreme. There is no place for you to sell, just a first entry short, first entry short. Now you're above the EMA, so I really thought we were gonna push higher, but we pushed back below. Now, can I look for a wider channel like this? It's just too broad at this point. This downtrend had a break new extreme. So not a clear price action. You have to be patient here and wait this out. And notice market keeps trending to the downside. So I'm going to identify spike and channel, and we have a break in new extreme. Like I said, there's a possibility for you to keep looking for a wider downtrend like this, but this is not really the correct downtrend because you keep overshooting the bottom trend channel line. Only one confirmation here, so not fully confirm with the third confirmation. You know, this is too broad, and visually you can see that this looks like a first leg down, pull back, second leg down. So this resembles larger two-leg pullback. So you don't be looking for too wide of a channel, especially if it's not confirmed. So this is a place where you can't really sell, but at the same time you can't really go long because there's no way for you to understand that the market may reverse now. Only thing you have to do is just to follow the bearish momentum now. Okay, larger two-leg pullback. Okay, and market is finally reversing to the upside, so I'm going to redraw the wider uptrend. Okay, we have a first break. We expect for prices to form new extreme, new high, first entry long. If we get a high low, there will be also second entry long, new high, first entry long, pullback, second entry long. Above the EMA, that would be great. But the signal bar is bearish. We can't really go long. And notice market keeps working to the upside consistently. We have a new high, first entry long, second entry long. But we're still far away from EMA. And notice we keep trending higher again. So at this point, once I saw a larger two-leg pullback down, this is where I'm starting to look for possible wider channel. If I'm just going to connect the first few swings, you can see little geometric formation at the bottom. I'm going to connect it with the second swing like this. Copy it, put it at the top. Notice one bottom, double bottom, triple bottom. We have triple test, but the signal bar was bearish. Can we get a second entry long, triple test? We cannot. The market keeps working hard. So you can see the EMA keeps rejecting prices. I have to look for some wider channel. Okay. You have a new high, first entry long, pullback, second entry long, and we are bouncing off the trend line. But the second entry long, notice how deep this bearish push was. This is extremely strong bearish push. It is an inside bar. I don't want to go long just yet. Also, we have some potential matching highs. So there's a chance that we may have additional push down. This was too strong. The second leg down. I want to see push above EMA and a confirmation of this trend line. Can we get a push above EMA high low? Even though it worked for scalp, it's not really worth it. Okay, we have a higher low, but it's horrible bar still below EMA. I can't take it. And notice prices are breaking the channel, but eventually you're pushing above EMA, so you're expecting high low or for second entry short to create new extreme. Just gonna slightly adjust it. So I was really surprised here. I was looking for push above EMA. The fact that we broke lower made me question the uptrend a little bit, but we shortly after have 3 massive bullish bars, so I have to now start trusting the uptrend again. But pretty much a very long time without the setup at this particular area. Nothing really forming that great. Market keeps creating a new extreme, so I'm gonna mark the new high. And also, as you see, price is working higher. You can see that you have first major leg. I'm just gonna copy it, put it at the top, and you can see market is very close to reaching the measured move. So you have a larger two-legged pullback. Market likes to move in pairs of twos. First leg, two-legged pullback down, second leg. So at this point, what does it mean? I have to pause looking for long setups. Okay, because this channel has break new high and I have larger measured move was reached. So buyers will take profits. Even though I have a new first entry long, second entry long, I cannot take a long here. Too far from EMA with the body, and the new high was reached alongside with the measured move. So I'm being patient. Okay, we have larger two-legged pullback down. First leg down, pullback, second leg down. I cannot go long. There is no key entry point. We're below EMA and we have a new high. I cannot go short because we have 2 legs down and downtrend played with the break new low. So you can see, oops, EMA is flattening a lot. So I can't really take any setup because we have a break new high. I can't really go long. At the same time, I can't really sell because it is too bullish. Notice you have a second entry short here off the range highs, but it is very hard to sell at this point. Yeah, it ended up working like this. I mean, you know that you're most likely going to reverse. Why? Well, because the measured move was reached, the second leg, and you have a new high. So there is no reason for bulls to continue trending to the upside. So you're thinking about possible reversal. You just need to time it correctly, but it's very hard to sell at this particular level while it is looking so bullish. Okay, market keeps working lower, so I'm going to redraw the downtrend. Okay, new low, first entry short. Is this a second entry short? No. We have a micro double bottom which resists the count, so this is only first entry short, far away from EMA. And notice new low, first entry short, pullback, second entry short. You have also smaller resistance at the top. You confirm the EMA, the downtrend needs to get new extreme, decent second entry short because the signal bar is a tier 1, very strong signal bar, and market created the new extreme and now it's getting too late. We have 2 great setups that are very close to being marked as high probability setups. Now that I'm looking back more at this setup, I can see that we have also a failed breakout out of the congestion, which is why the market continued working higher on just the first entry long of 2 key entry points. So now that I'm looking back, I like it more, but it is hard to in real time to make all the analysis because it happened quite fast. But since it is also a congestion, you have a failed breakout at 2 key entry points, most breakouts will fail. I hope you had a great trading day, and I'm gonna talk to you next time. Take care, everybody.